Okay, so let's have a look at Part C then. So prepare a profit and loss account for the year ended 31st of 12, 2016. So what we're going to do is going to work down through the receipts and I'm going to walk down through the payments. So the first one, member fees. So there's going to be an adjustment on that based on anything from the start. So we're going to look at the start, see if any members give us anything in advance. So see here, members fees paid in advance, 3,000. So that's going to be used as part of the adjustment. Then have a look at the answer. We've got more member fees here. So member fees for 2017 in advance. I've got member fees in arrear for 2016. So your adjustment then, or the working you're going to use for member fees then, is going to be the amount. So that's taken straight from the question, 270,000. You're going to take away or add what's on at the start of the year, which was prepaid at the start of the year. So member fees, 3,000 is going to be added on. Then you're going to take away prepaid at the end of the year. So 4,200 then is going to be prepaid for member fees. And then you got your arrears then of 2,700. And remember that 2,700 here, we're adding on a check. So in this question, they've come up with a check that has bounced. So closing balance for the bank does not take into account bank charges of 110 and discount check of 950. So that discount check, so received from a member, meant that a member has written a check to pay for fees. That check has bounced, so that means that the fees are going to go down by 950 from the check, but also what's due to us is also going to go up. So that 2,700 plus 950, that means 3,650. So that's what's due to us that goes into your balance sheet as your current liabilities. So this 4,200 goes into your balance sheet as your current liabilities. This add due of 3,650 goes into your current assets. That's made up of the 2,700 from the question and the 950 from the check. And then you also need to reduce your member fees by 950 because that check has bounced. So that gives us 171,500. So your first item, member fees. So 271,500. The next one then, as we work down, it's going to be your investments. So we have done a working on our investments at the start, and that is 2,700. So we look back here, our investments working 2,700. The next one then, shop receipts. So it's not shop receipts, it's going to be your shop profit that we calculated. So 27,250. And then it tells us that we sale of furniture that cost 20,000. We got 10,000 for it. So just have a look and see. We got furniture of 12,000. So furniture held on the 31st of the 12th, 2015. So you just have to do up your disposal. So your next working is going to be your disposal of your fixed asset, which is your furniture. So you're going to have your furniture account, your cumulative depreciation account, and your disposal account. So your balance of 40,000, that's coming straight from the start of the question. So we have 40,000 for furniture. We sold furniture that cost 20,000, so we need to reduce our furniture account by 20,000, and that goes into the disposal account to calculate whether we made a profit or loss. And then we bought some more furniture then of 12,000. So we're going to increase our furniture account by 12,000. So your closing balance is going to be 32,000. So you'll have 40,000 on the debit side plus 12,000 on the debit side. You'll have disposal of 20,000 on the credit side. So your balance then is going to be 32,000, and that's going to go into your balance sheet. Your accumulated depreciation then, so we've got this 24,000, that's taken from the start of the question. So up here, at the very start, we would have done our furniture, 24,000 of 3 years. Then we need to calculate the disposal on the asset that we had. So it's going to be 20,000 multiplied by 20%, gives us 4,000. And 4,000 multiplied by 3 years gives us 12,000. So the cumulative depreciation disposal on the asset that we sold is 12,000. So we need to reduce our cumulative depreciation account by 12,000. So it goes on the credit debit side, and that then goes on the credit side of your disposal account. And then we got the cumulative depreciation for this year, or the profit and loss for this year. So that's going to be your 32,000. So 32,000 is this your balance here. Multiplied by 20% gives you 6,400. So that's going to be a profit and loss. And then the balance then is going to be 18,400. So that's going to go into your profit and loss account as an expense. You'll have 32,000 in your balance sheet as a fixed asset and 18,400 in your balance sheet as a cumulative depreciation. Then the disposal then, so the bank, we got 10,000 for it. Where does that 10,000 come from? This 10,000 here. That's given us in the question. So we would have received 22,000 for the asset. It was only worth 20,000, so we made a profit of 2,000. So that 2,000 then goes into your assets as a profit. So you're going to add up all your assets then. Then we're going to work down through our liabilities. So you got wages and salaries. So that's going to be a working that we did. So working 4, 73,100. You have telephone, there's a working on that. Working 7, 1,300. Insurance, there's a working on that. 6,350. So all of them would have went into the shop. Next thing then we've got purchase suppliers. So we're going to take into account creditors at the start of the year and creditors at the end of the year. So creditors for supplies to fitness was 2,000 at the start of the year. And at the end of the year, our creditors were 3,600. So that's going to be another adjustment. So 43,200. Take away what's at the start of the year because that was for the previous period. Add on what's at the end of the year. That's for this period. That's what we bought. That's how much we owe for this period. And that goes into your balance sheet as a current liability. And then what you left over then goes into your expenditure account. So cleaning then is your next one. So contact cleaning then is your next expense. So see if you've got anything at the start. So prepaid at 200, so that's going to increase it. Anything at the end. So it's done under contract payment advance and includes the payment. So 600 then for next year, so that's going to reduce it. So your contact clean is going to be your next adjustment. So the amount from the question, 8,300, add on the prepaid at the start, take away the prepaid at the end. Remember that prepaid is going to go into your balance sheet and the figure left over then is your expense. So your profit and loss, 7,900. Then the next item then is your light and heat. So you would have had an adjustment on that. So light and heat, 6,700. So from working 5. Then you've got, so we bought buildings. So we're going to have depreciation for buildings and depreciation for furniture. So those two are going to be your next two workings. So the amount for the buildings taken from the start of the question of 600,000. Then we bought more buildings on the 1st to the 4th of 150,000. So 60,000, 600,000 plus your extension gives you 750,000. That goes into your balance sheet as a fixed asset. This 600,000, we had it for the full year, so it's going to be 2%. The extension was only bought on the 1st to the 4th, so it's not for the full year. So you only have it for 9/12. So the total then for depreciation is going to go into your profit and loss is 14,250. And then the figure for your cumulative depreciation then for your balance sheet is a 36,000 from working 1, plus this 14,250 from this working, which gives you 50,250. So this figure 14,200 will go into your P&L. Then we already have the depreciation for the furniture already done as the previous working. So when we sold it, we would have done the calculation for it, so 6,400. And then the next one then after that, so we've got equipment, we have to do our equipment depreciation as well. So the value of our equipment in the question is 80,000. So 80,000 by 20%, 16,000 will go into the profit and loss for the expense. And then we're going to add that 16,000 onto the cumulative depreciation that we have as part of working 1 of 48,000. That'll be your cumulative depreciation in the balance sheet. So 16,000 goes in then. So laundry then, this one here, laundry. So remember that we would have included this person's wages as part of the laundry. So just the payment for laundry includes 2,700. So that's going to be another working that we would have done earlier on. So it's 8,900. Then your loan that we have as part of working 3. And then these bank charges. So these bank charges are part of this question here. So the closing bank figure does not take into account bank charges of 110 and a dishonor check for 950. So that 110 is an expense. It's a fees that we have to pay. So it's going to increase our expenditure. So you're going to add up all your liabilities. You're going to take them away from your assets. It's going to give you a net profit. And then you're going to add on your reserve that we calculated as part of your statement and revenue of 351,500. So that's going to give you a total profit of 468,400, and that's going to go into your balance sheet as part of your finance file. So your profit and loss goes in there, and that's how you answer part C, calculating the profit and loss.